Hello and welcome to CMS Forex News. I'm market analyst Nick Nassad. Today is Thursday, March 19, 2009. Let's start with some key highlights, as today's session saw a continuation of the sharp moves we saw yesterday following the Fed announcement that it would begin buying Treasuries. That announcement will work to push down yields on U.S. assets, which has prompted investors to seek returns elsewhere. The extra money that needs to be printed by the Fed will also flood the market with greenbacks, increasing supply, which should weaken the dollar. The move away from the greenback in the currency market continued unabated today, with the euro-dollar pair surging above 1.37 for the first time since January. Today's rise, from low to high, amounted to about 300 pips and found resistance near 1.3740. After a slight correction in Asian trading to the 1.42 level, the pound-dollar pair rallied 400 pips to reach the 1.46 level. That broke above resistance from March 6th, and now brings the pair up against horizontal resistance from late February. We have also broken a downward sloping line of resistance that had been established as part of a downward channel all the way back in mid-December. The response so far has been severe to yesterday's Fed announcement, and now it remains to be seen if the recent dollar weakness continues or if it will face a period of retracement in tomorrow's Friday session. The pound was also stronger against the euro today, pairing about half of the losses it saw in yesterday's session. The pound was pressured yesterday by weak employment data and then fell further as the euro surged on the Fed's announcement. Today, traders cut into those euro gains, retracing to the 0.94 level. The US dollar-Swiss franc pair fell to a 9-week low, plunging more than 600 pips in the last two sessions. That smashed through short-term support near the 1.1450 level, though that level was retested as resistance in overnight trading. In the U.S., jobless claims fell by 12,000 to 646,000 for the week ending March 14th, which is better than expectations, but still remains at a very high level consistent with sharp declines in employment. The number of total claims continued rising, increasing to 5.47 million, an indication of how difficult it is for those that lost their jobs to find new ones. In two other releases from the U.S., the Philly Fed Index continued to show contraction in March, registering a negative 35 reading. That headline number was better than expectations, but the underlying data reveals that the region's manufacturing sector continues to see general activity, new orders, shipments, and employment in significantly negative territory. Also today, the Conference Board showed that its leading index declined by 0.4% in February, beating expectations, but also a gloomy reading that shows a turnaround in the economy may be further off. We remain with our focus on our dollar crosses today and take a look at the dollar-yen pair. The pair followed up yesterday's 270 pip slide with another 270 pip fall today, testing the 93.50 level, a 3-week low. Stocks in the U.S. were down today, with the Dow Jones Index off 100 points, with some market watchers saying that the recent rally in equities, especially in financial stocks, may be the result of investors covering short positions, which raises questions about the long-term endurance of the recent rally. In Canada, consumer prices were higher than expected in February. On the month, prices rose 0.7% and increased to a 1.4% annual pace. The increase was primarily due to higher food and shelter costs, while transportation costs, including lower price for gas, were the main negative contributors. The core monthly rate rose to 0.5% for the month. The US dollar-Canadian dollar pair extended its losses as the greenback hit a 1-month low right below the 1.22 level. Higher consumer inflation boosted the loonie, and Canadian equities were poised for their 8th straight advance. The pair retested a line of support in the Asian session that has now switched roles to act as resistance, which was followed by a 300 pip fall overnight and at the beginning of New York trading. In the rest of the New York session, the greenback managed to claw back some of its losses to trade near the 1.2350 level. Coming up overnight, Germany will release data on producer prices, while the Eurozone posts its industrial production figures for January. Tomorrow morning, Canada reveals data on retail sales, and at noon Eastern Time, Fed Chairman Bernanke gives a speech. And that wraps up today's broadcast. Thank you for joining us here at CMSFX.com. See you tomorrow as we wrap up the week. As always, we wish you happy trading.